I'm a little bit surprised, especially when you look at some of their peers. It looks like Tesla is leading in this country right now.
Also had some China EV numbers that came out over the weekend here, and they did state that Tesla actually made around 84,159 China-made EVs here. That was around a 9.3% increase on a year-over-year basis. And
there was a notable concept car debut for Mercedes this weekend. What's the deal there?
Total vehicle sales were down about 2% year over year. Now, truck sales were still higher by 8%. But I think the SUV market is getting a little bit saturated. There's a lot of competition.
We do view it as a buying opportunity. Tesla, of course, is 100% non-union, so they're being viewed as a winner in the event of a prolonged UAW strike.
All that and more, so let's get to it. Tesla stock down around 2% today after having a pretty good trading day on Tuesday. I believe much of September will be moving in a sideways direction, but one thing's for certain, Tesla will remain volatile.
Despite headwinds in the Chinese economy, the Tesla numbers for deliveries in China were actually pretty impressive, it seems like.
Yeah, they're showing a year-over-year and a month-over-month increase. Those deliveries came in better than what folks thought they would have been.
Imagine that. All the news coming out of China is that their economics are weak. There's no way anybody can be successful in that market during these rough times in China. I wonder why Tesla is doing so well there.
They can thank the price cuts that they've been making, of course, over this year for really incentivizing buyers to come in and buy. However, that's kind of a mixed message.
Mixed message? You can thank the price cuts for Tesla navigating this minefield of a macroeconomic situation.
Since May, those numbers have not been as strong as what some analysts say that they wanted them to be, right? And so that's because some prospective car buyers are waiting for prices to go even lower.
Wow.
Right. And so, but so far for August, it was a 9.4% increase year over year to just over 84,000. Month over month sales, those climbed to just over 64,000 units sold in July from the 64,000 units that were sold in July. Now, reminder, the Shanghai Gigafactory manufactures Model Y and the Model 3 EVs for Tesla.
This is pretty impressive, the fact that they're getting these numbers. To your point, it comes with the cuts, so there's a little bit of a trade-off there.
There is no trade-off. Tesla is the only company with double-digit margins for their vehicles, up in the high teens, mind you. And a little PSA, if you're trying to wait for the lowest possible price for a Tesla, you'll be waiting forever because the goal is to continue to lower prices. If you want the best vehicle on the market, it doesn't matter what price you're getting it at, it will be a bargain.
I'm a little bit surprised, especially when you look at some of their peers. It looks like Tesla is leading in this country right now.
Well, right now it has the highest month-over-month percentage jump, over 30%. But Li Auto actually had the highest percentage jump year over year. That jumped about 664% higher than last year. But the number of actual vehicles delivered in China, they were all dwarfed by the Warren Buffett-backed company, BYD company, and Tesla is number 2 after that when it comes to the actual number of the deliveries.
Okay, so BYD growing pretty fast here. There's definitely a lot of competition nipping at their heels, of course. I still feel, though, that the fact that they've managed to figure out how to kind of thread that needle right now in an environment where people could easily just not be buying at all or saying it's too expensive, the fact that they're still able to put out some volume, kind of surprised the stock's not doing a little bit better. No analysts or anything chiming in, I guess.
Right, but there's some other news happening with Tesla as well over in China. Now, it's reportedly suing a Chinese firm over tech secret infringement and the also unfair competition disputes. And so they're suing the Bingling Intelligent Technology Company. It's a chip designer and a parts maker based in China, and the suit is going to be heard apparently on October 10th, and we'll find out more as the story develops, but that just might be a little bit of the mixed sentiment that we see today.
When you're talking about BYD numbers, they're also including the hybrids, and they've got that little micro machine Chinese car that's pretty affordable, but Death machine on wheels. So take BYD's numbers with a grain of salt. They are doing fairly well though. As for the lawsuit, Tesla already goes out of their way to open source their patents. So for them to be suing in this capacity, something blatantly wrong must have went down.
A common theme here on this show is discussions around the EVs and particularly Tesla. So happy to have senior markets correspondent Kevin Green here for us to talk about the potentially the king of EVs. I think, is that the story? Is it from the Journal?
Yes, we are seeing that from the Journal here, and they're actually really talking about their ability to expand their charging stations, and that could be a pretty significant core of their business here moving forward, and rightfully so. It's actually one of the fastest growing areas of Tesla, and when you're looking at the charging stations as well as the storage or energy storage space here, they are calling out the fact that Tesla is able to be able to get federal grant awards at around, when they put their bids in for these federal grants, they're around 50% less when it comes to cost compared to its competitors, and they do believe that the construction costs for these charging stations are more efficient than other competitors as well. So this could also be a little bit of a windfall. And Alex, as some companies that have the ability to gain government funding really do rely on that type of funding, and usually is a pretty secured way to be able to gain revenue here. So that expansion can definitely help out. And when we are looking at the market landscape in itself, we are seeing a lot of the competitors or major competitors here in the United States really trying to adopt Tesla's charging stations and really forming these partnerships with them. So if they could corner that particular market, that could be once again another tailwind when it comes to this name here. And that's what the Wall Street Journal is really calling out here. One thing to kind of also note, I think right now is just coming up with the infrastructure strategy. And if we see Tesla really trying to put out a plan for the federal government and for this industry as well, to be able to select certain areas to put these charging stations at. Now, I think that could also, gain a little bit more momentum when it comes to this business here in the near term and long term, especially in an election year, which is where they could be on the ballot, if you will, in some respects, to be able to try to gain additional funding. And I think both sides of the aisle are really open to that type of that infrastructure spending when it comes to EVs, because we do know that this is going to be the wave of the future. So that's what the Wall Street Journal is also reporting.
Not only are they building the charging stations faster, they're building them cheaper. Men lie, women lie, numbers don't lie, especially when you're talking about money, folks. The government is going to be giving away this money for those that build out this infrastructure. You don't think they'll be favoring the cheaper, faster option, especially when it's considered the most reliable? Electrify America, EV Go, these motherfuckers got problems.
Also had some China EV numbers that came out over the weekend here, and they did state that Tesla actually made around 84,159 China-made EVs here. That was around a 9.3% increase on a year-over-year basis. And if you're looking at the Model 3 and the Model Y, that actually rose about 30.9% on a month-over-month basis when it comes to those deliveries. So we are seeing some growth here and some impact when it comes to these pricing wars that we are seeing here in China. But at the end of the day, Tesla has committed to having this strategy of trying to be very price flexible. And with the infrastructure that they've already built out with these gigafactories, they want to be able to maximize them as much as they possibly can, because if they do not, then the incremental cost per vehicle also increases, which is not going to be a benefit for them. Now, we did hear some chatter last week when it came to their Berlin factory and potentially having them reduce their production targets here for the end of July and into August. We're going to see if that actually does come to fruition here. Maybe that's some softness in the market, or maybe they are retooling it for another model that they're going to bring out here in the near future. But when you're looking at the China data, we are seeing a lot of cars being sold here. They are capturing some market share, and I think that's a really big positive for Tesla. And we are seeing the shares up around 4% in the session right now.
There is no softness. All of these moves, the retooling of the factories, these are premeditated moves that they're thinking 2 or 3 years in advance. I mean, you're talking about a company that in 2014 said that they were going to produce 500,000 cars by 2020 and got laughed out of the building. Now they have a target plan of producing 20 million electric vehicles in the year of 2030. You mad, bro?
Interesting about Tesla, Kevin, that it actually is against its peers that are the domestic Chinese manufacturers. But it's not actually on top when it comes to the numbers, on a numbers basis. It did on percentage basis, month over month. But can you tell us a little bit about how its competitors performed versus Tesla during that quarter?
Yeah, so the biggest competitor that they have right now is BYD, and they actually delivered around 274,000 vehicles for the month here, and that was actually around a 57.5% increase on a year-over-year basis. But one thing to note, Nicole, BYD really does focus on selling hybrid vehicles. So right now, China's data kind of mixes in hybrid as well as just pure EVs or BEVs, battery electric vehicles. So sometimes this data can be a little bit skewed.
Ding, 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 ding! Tell him what he's won, Johnny!
Mingle these two data points together is because the majority of the population that's buying these hybrids are really only utilizing the electric portion of the hybrid vehicle because they live in predominantly populous areas. And so that's why they really mingle these numbers together. But if you're looking at the profit margins and when it comes to the per vehicle car sales in itself, Tesla still does outperform. They're just not outperforming when it comes to pure volume being delivered to China customers. But once again, you have to have that balance of having the most deliveries and or the better profit margins. And that's really why we have seen a huge premium when it comes to Teslas, because they're able to profit a lot more when it comes to their cars at 18%, 19% here if you're looking at the United States, rather than maybe some other EV players or hybrid players that are out there that are only making around 5% or maybe 6% margins when it comes to the cars. So obviously they need to sell more in order to be a little bit more profitable. So it's kind of a double-edged sword, but Tesla's definitely taking it in stride and continuing to ramp up their production in China. And hopefully we start seeing a little bit of an end to this price war, a little bit more price stability here, and that's going to provide investors a little bit more ease or calmness when it comes to the future outlook for Tesla here in the near term. In the long term, investors that invest in Tesla are really bullish on this name, and I continue to talk to them on a day-by-day basis.
Quote Jerry Buss, I'm all in. That's what you do when you have a winner. I have no doubt that if you've done the research, if you've taken the notes, and you've plotted their progression, you know that Tesla has already won the decade. Don't rush me, cash register. I'm getting there. There is great opportunity considering the market still hasn't figured this out. But it won't be long now. It won't shock me when the stock goes vertical. It's just a matter of time. The question you need to have is, are you going to be along for the ride, or are you going to be left behind?
There was a notable concept car debut for Mercedes this weekend. What's the deal there?
Yeah, so kind of a stunner here at the Munich Auto Show over the weekend. Mercedes debuted their CLA EV here. Sort of the CLA class, normal gas-powered cars. They're going to kind of cancel that car, sort of see it off into the sunset. But then they announced this EV that's going to come up based on a concept that'll be sort of almost production ready. This new car, quite stunning in its looks. Going to have also around 400 miles of range, if not a bit more than that. So it's sort of taking on Tesla, the Model 3, which is around 320 or so. So Mercedes up in the ante there from a range point of view, but also, as we know, Mercedes knows what they're doing with luxury. A nice widescreen digital display in that cockpit. It's going to look great, I think. So we'll see that probably the next year or two coming out from Mercedes. Can't come soon enough for the brand, I think.
Well, Praz got that part right at least. The rest of that was hot garbage nonsense. Tesla's Model 3's current model, 320 miles. But what about the Highland? That'll definitely be in Europe way before this concept car from Mercedes comes out. But that's nothing new. Mercedes, late to the game? Sure, popular luxury brand, they're gonna sell their cars, but they will not be trying to take on Tesla, as Tesla will be consuming most of the market. Project Highland will be better than anything that Mercedes will be able to come up with in the next 5 years.
And George, this stock's not just under 30, it's like perpetually under 20. So safely following into our criteria here for under 30. But let's talk some Ford. Strike murmurs is on the forefront, I guess?
I think so. I mean, if you look at the concessions the company's actually offering, about a 15% increase in wages, doesn't look like that's been accepted by the UAW, and I think this is presenting challenges for not just Ford, but also General Motors. If you actually look at the other automakers, the international ones like Honda and Toyota, they're actually hitting 52-week highs, while Ford and General Motors are nearing some 52-week low levels. So I think the UAW issues are sort of plaguing the companies, but at the same time, I think the business model also is a little bit strained, because if you look at their business in the past decade or so, they're moving away from passenger cars. And I think if you look at some of the other automakers that stuck with passenger cars, like Toyota and Honda, That's been a big good business strategy, considering now that if you look at SUV sales for Ford, they were down about 6% year over year when they reported their August numbers.
You're damn right their SUV numbers are taking a hit. But just you wait. The next gen vehicle will destroy Toyota and Honda. At least Ford might have a parachute if they can get their battery electric vehicle side up and running. But don't you worry, Toyota, Honda. Tesla has its sights on your passenger vehicles with the release of the next gen vehicle. And something tells me they're operating without a parachute.
Total vehicle sales were down about 2% year over year. Now, truck sales were still higher by 8%, but I think the SUV market is getting a little bit saturated. There's a lot of competition, and that's an area where there's a lot more price sensitivity. And I think the elements behind this whole new business model around autos right now, which is a high price, low volume model, I think it's starting to see some cracks because of the fact that unaffordability is just becoming very egregious from the standpoint of the average consumer not being able to afford just an average SUV now.
George, question for you. This is it would be an unprecedented situation when it comes to a strike. What kind of impact could this make on the big three automakers and the industry?
Well, I think on the industry, you have to separate the companies that are more affected by the UAW versus not. And some of the international companies, if you look, like I said, TM or Toyota, HMC, Honda Motor, both those companies are higher today. So I can tell you right now, the market basically is telling me or is communicating that the UAW strikes are affecting the domestic automakers much more so than the international ones. So that's the first thing to keep in mind. I also think that the companies that are still selling passenger cars from a business model standpoint are performing better because they're a little bit more affordable than SUVs. And I think that's another thing to keep in mind.
Garrett, it's great to have you. I'd love to get your take just generally on whether or not you see sort of a big three happening at once, or do they go after one on a pattern negotiation? What's your view?
Yeah, thanks for having me. That's the big question right now. It's unclear if the UAW workers are just going to strike at one company, most likely being Stellantis, because they appear to be the target company this round of negotiations, or whether it will be all three, the Detroit three, Stellantis, GM, and Ford. So, that's the big uncertainty. But we think the consensus is that there will be a strike. We think this strike could last several weeks, perhaps even stretching for months, just given that the two sides appear to be very far apart, much further apart than last time, 4 years ago, when there was a 40-day strike. This appears to be much more of a divide this time around.
Right. You think the street's more worried about the actual interruption of production, or the result that would be in the form of higher wages or union measures, work measures that maybe the company would not like?
In the near term, of course, we think the street's more concerned about the impact of production. Now, inventories have finally recovered to levels that are close to normal, but after a very difficult period of the last 2 years when inventories were at record levels because of supply chain issues and semiconductor shortages, they finally recovered, and prices have kind of evened out. But if there's a strike, we think you could be looking at another increase in prices. And then longer term, just the magnitude of the wage increases, the UAW is pushing for a wage increase of more than 40%. Now that's going to really impact the bottom line of those three companies, most so General Motors, in our opinion.
Yeah, why do you say that? I was going to ask why you say GM is likely the biggest loser in the event of a strike.
It's given their percentage of UAW workers. In 2019, when there was a 40-day strike, it negatively impacted GM's earnings by about $3.6 billion for the year, or $1.89 a share. And so they just have more exposure. They're not as diversified in terms of their production base and profitability base as either Ford or Stellantis. And so it really would impact them the most.
What about this posture from the head of the UAW, the president, Shawn Fain? You know, we followed some of his comments. Pretty aggressive, pretty confrontational, calls this a defining moment. Where do you think that, is it personality driven? Is it the labor environment that we're seeing? The fact that they're emboldened by other strikes and other areas like what we saw with UPS and Teamsters, or something specific to the automakers?
It's a combination of all these things. But if you look back 4 years ago when the last deal was struck, that was just months before COVID. And, I think the COVID experience, the decline in real wages for workers, it is a lot of, what's behind this. But Fain was just elected to that position less than 6 months ago. And so he's really determined to make his mark in this first round of negotiations as head of the UAW. And so, all signs point to this potentially being a prolonged strike. They've also increased strike pay by nearly double. So striking UAW workers will be getting $500 a week in strike pay. 4 years ago, they were only getting $275 a week. And so that really, in our view, prolongs the potential for a long strike.
Hey, finally, Garrett, on Tesla, you point out a net winner, although it's had some trouble reasserting itself over the 50-day, and there's a lot of commentary this week or so talking about how sentiment might be at risk given the pricing pattern and what might happen to margins. Your thoughts on that?
A lot of concerns still regarding margins, and Tesla really kicked off this pricing war in EVs in early January when they announced their first round of price cuts. Since then, there have been several price cuts announced, but we think given the sell-off in the stock over the last 6 weeks or so, we do view it as a buying opportunity. Tesla, of course, is 100% non-union, so they're being viewed as a winner in the event of a prolonged UAW strike.
Some people are getting it. In conclusion, Tesla is knocking it out of the park when you're talking about the deliveries in China year over year in August. They will continue to defy Wall Street expectations, but those damn pesky price cuts are eating into their margins. I don't like that. As Tesla continues to not give a about their feelings, the Wall Street Journal recognized Tesla as the king of EVs, at least when it comes to charging. Faster, cheaper, and just plain more efficient. Tesla is the undisputed king of EV charging. Everyone else? Take note. Mercedes CLA concept hopes to compete with the Model 3 eventually. Keyword, eventually. And the UAW strike looms even heavier as we reach the middle of September. There will be no winners, only losers for the parties involved, but there will be one winner. You guessed it, folks. Starts with a T, ends in Esla. Well, that's all I got for you today. Be easy. Peace.